Expectations. Isn't that what life is about? How about the market? How about a high bar versus low bar? How about the bar that Coca-Cola had to clear? Other bars are really low and you can just get above it. That's the tale of two types of market here. That's what we're going to cover today on Pre-Market Prep. We're going to bring Mish Schneider in at 8:35, get her views on the market, and get an update, a very special update on the Modern Family. We'll cover crypto. What's going on with crypto here? We'll cover ratings. We do it all here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Boy, our technical analyst, Brent, he just focuses on whole numbers. Another rejection of 7,000 here. We're down 5 3/4 handles, 69.7750. Buck flat, 96.75. TLT showing a little bit of a bid, but finding resistance, up 25 cents, 87.77. USO flat in the $78 area. GLD and SLV. Down again. Is the run over? We'll discuss that. GLD down 470, 462.34. SLV faring worse, down $1.87 to 74.20. In Bitcoin, well, that was a nice rally, but what's going on at 70K? Down $2,345 at 68,600. These charts are brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one platform. Learn more about TradeStation. And Dennis and Brent, I just had an epiphany here. S&Ps are rejecting 7,000 and Bitcoin is rejecting 70,000.
Oh, I like that, Joel.
Pattern recognition. That's what trading is all about. There you go. Wow. Let's go into like gold, silver down. We're seeing, some of the momentum come out of that a little bit here this morning. But let's go into the Bitcoin. Because like I've been saying here, Bitcoin led us down. They really was the start of the sell-off and all the momentum stuff. This started in October. This didn't start in January. This has been going on for 4 months. So way back to October when everybody was getting in Bitcoin and Bitcoin was going to $1 million and Kathy Wood was up there just saying all our stuff 2 million price targets. The rug has been pulled. The rug was pulled in October, pulled in November, pulled in December. Well, December kind of flat and then really pulled hard in the last 2 weeks. So, so just talking Bitcoin in the context of Bitcoin here, we've had the bounce back the last few days. Last 3 days, good. But now you get a sell-off here again. So I would say, is this, Bitcoin, is this, and I want to ask you, Joel, obviously, this is, your specialty here. Talk to us about the technicals. Let's do the IBIT, because I like trading the IBIT. Okay. It's very liquid. It went from 50, overshot, it was really oversold down to 35, and then bounced to 40. Now we're leaking here again, though. Is it a concern? Is it a problem? Let's talk Bitcoin in this context.
Okay. Very simple. And we could use this IBIT chart, or we could use the gold and silver chart. Whenever an instrument, a trading instrument, has a monumental run, okay, there's always some type of retracement, right? Not always. I mean, we're still waiting for a big retracement in Micron and SanDisk, but it's going to come. So what happens is when you have the break, like right here, this initial break, the initial October flush, the first, like when a chart's going like this, I have no idea when it's going. When it has a break like this, I say, can it get half of that move back? Can it just say this was a correction, get half of the move back and keep on going? It failed. It failed miserably. Then it had another major break. And then I don't know where you want to figure your retracement from, but high, lower high, lower high, lower high, way below the 50, way below the 200. I mean, if you're a technician, we got a lot of them out there, a lot of big mouths on Twitter. They're all technical. You can't argue that the Bitcoin IBIT are in marriage, are in temporary bearish patterns.
Yeah, well, they're in bear markets. I mean, a bear market is officially defined by the media as being down 20% from the highs. We're way down, way more than 20% from the high on Bitcoin. So they're in full bear markets. And there is stuff that is in bear markets here. And my argument just is that it kind of started here. I almost feel like Bitcoin, Ethereum, crypto was kind of ground zero for the money to start coming out of the momentum stuff. Like bring up Ethereum and let's have this discussion here too with ETHE, because it's charts, and we've been talking about this. They are like totally trading together now. Like the correlation here, it wasn't always this strong, but in the last couple of months, it is, and I always do this, I've been doing this for months, it is identical. Those two charts, Ethereum and Bitcoin, they literally just look the same. Now, those two charts don't look the same. When you get the same time frame, it looks like the same asset now. It's not even like these are completely different cryptocurrencies, but they look like the same one. They look like they're tracking the exact same thing. They are just, it's the same. I mean, and I just know, like when Ethereum sells off even a little bit, then Bitcoin's going to follow suit seconds later. It's the algorithms are all over it here now. They're trading them together. But the bigger, contextual conversation here is crypto a problem for the momentum names in the stock market? That's the question. It has been. Can it decouple? Can crypto continue to collapse, but stocks like Palantir start to rally? I'm not sure. I'm not sure they can, because it's the same type of investor. The one that doesn't care about valuation, the one that, because there's nothing to value in crypto, the one that doesn't care, about fundamentals, the one that just cares about a story. These are storied assets, Bitcoin, Ethereum, Palantir. These are storied stocks, storied assets, and it's the same type of investor in both. So the question is, can those momentum names come back without crypto and Ethereum and Bitcoin?
We're going to take this time to read from our wonderful sponsor, Hive. This show, Pre-Market Prep, is brought to you by Hive Digital Technologies, a global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI operating. With nearly half a gigawatt of renewable energy, Hive is one of the fastest-growing Bitcoin miners, on track to grow even more this year. There is a QR code in the bottom right on screen right now. You can scan that with your phone to get over to HiveDigitalTechnologies.com. There's also a link in the description of this YouTube video. And so, Dennis, and Joel too, of course, while we're having, Ethereum and Bitcoin charts and maybe a few other cryptos identical, we do have separation elsewhere. And we're at a bit of a crossroads here, right?
Well, we have separation. So what has happened? Let's just break down what has happened in 2026. We've had a momentum stock crash. Like all the Momo names crashed, even to the point of silver. Silver became a Momo name, crashed. Like what's the official definition of a crash? Usually the market starts saying when things fall 30% very quickly, it's a crash. I mean, how far did we fall in the crash of 87, Joel? How far did we fall in the crash of 87? Wasn't it like 27% in a day?
Boy, oh boy.
You were there on the floor.
I can't remember the exact percentage.
I think it was 27% or 29% or something like that. One day. Silver did that. Silver crashed a week ago. Went from 109 down to 70 in one day. So silver officially crashed. We've had a lot of other things rolling crashes. Like it's been slow. We haven't seen, like a lot of things get hammered 30% a day, but a lot of stocks are off 30% from the highs. And then we have the tale of two markets here, where all of this money that has come out of these momentum names, these nosebleed, high valuation names, has went into value. And it's went into lower P stuff. And it's went into stocks and the real economy stocks, companies that are making real money and making a lot of money. That's where it's went to. And we know even defensively, it's went into the staples. It's went into the drug stocks. It's went into a lot of industrials. The Dow Jones Industrial. We heard it from Trump. New all-time high, 50,000, what great for the market. But it has been the tale of two markets. And if you're sitting here and you've been invested in lower PE stuff, you're loving this market. But if you're sitting here and been invested in story stocks, you're like, man, this year sucks. So the question is, do we start to turn it around on these momentum names, even if crypto falters? Going back to that original question, because nobody answered, I'm asking the chat as well, because I'm not sure those momentum names can come back without crypto.
I don't think they can.
There's so many stocks that are just so far off the highs.
They don't have the money, man. They don't have the money that it was at 100.
And maybe that's where we are.
Yes.
It's like, show me the money market.
Yep.
It changed. We don't want a story. We see how often, OpenAI last year, Anthropic headline stocks pop 20%. We get those headlines, Brent, you've been talking about in the STN room. The stocks don't pop at all in those headlines now. They don't care. What they care about is profits. They care about like real money. They care about valuation. This market all of a sudden put its CFA hat on and actually cares about valuation. So
tell everyone what a CFA is, Dennis. I don't know.
Chartered Financial Analyst. So if you're just following for the first time, that's my CFA after my name. Chartered Financial Analyst. You go through, you do the courses, and it's all built upon the premise of good companies and reasonable valuations. That's what it is. I mean, this market hasn't rewarded that for a very long time. In the long run, it does reward that. It does reward profits. I mean, Warren Buffett is completely, even though not a CFA, completely built his whole legacy around good companies at reasonable valuations. We didn't care about valuation really for the last 2.5 years. It hasn't mattered. We've seen stocks go higher with nosebleed PEs. That is not happening in the last 3 months. That has now turned. Does it come back? It can. I mean, maybe these stocks all get their stories and they do come back, but what we're seeing is, it's like, and again, we can go into, the software names where the valuation has become reasonable, rolling crashes there too, and AI displacing certain, so maybe it's just AI displacing certain companies. There's a lot to chew on here, and this market is very tricky this year because it's not as simple like, oh, buy the dip and stocks go higher, or sell the rip and stocks go higher. I mean, overnight, we saw a little bit of the bar, and you've got to respect all that. But when you're analyzing stocks for trades, you've got to understand the environment that you're in, and you've got to understand what the leaders are. I'm just still arguing that crypto is the leader on the downside here. And I think you've got to be cautious with all the nosebleed valuation names as long as crypto is still rolling over. And crypto is still definitely in a bear market.
And just one final point before we move on here, and I don't know if other financial channels or whatever people do with their technical analysis, but one thing we try and stress is overhead supply. And when stocks are going up and making new all-time highs, there's no pain. No one wants to sell. You know why? Because it's going higher. But you created a situation here now in Bitcoin, and how many people are out there saying, you know what? When this gets back to 100K, I wanted to sell at 100K the first time, and I missed it. But if it gets back to 100K, I am out. 6 digits, I am out. Okay? Now some of those people are saying, well, if it gets back to 90K, it's a double for me. I bought it at 45K.
Right.
And then people come down to 80. And now are they coming down to 70? Is that the new wall? So just talking about overhead supply, but kind of this whole discussion is leading us to like expectations in the market, right?
Yeah.
High bar, low bar. And we can explain that when a stock like Coca-Cola, I mean, you could ask ChatGPT. I mean, when is Coke had this kind of move? That's a high bar.
It went up 10% in 2 weeks. Coke. So you could go and say, and Coke reported here this morning, which is going to bring us into the earnings, but you can say, man, the stock's going up. This company's going to kill earnings. This company's going to rock earnings. Coke did not go up because of its fundamentals. Coke did not go up because, oh my gosh, the company is killing it. Coke went up simply because the momentum names were getting killed and money was hiding. So I think you actually set up a pretty decent short on this Coke trade going into the earnings report because you had a high bar with the chart going up, but you also have a stock, and this is a rare event, where it's running and running and running, nothing to do with its own fundamentals. So the market might be thinking, oh man, Coke's going to probably do really well because, the stock's been going up. That's not the case at all. Give us the earnings, Brentster, because these earnings were meh.
These earnings were meh for sure. They missed on the sales, which doesn't happen too often with Coke. They reported 11.8 billion in sales. Analysts were over 12 billion, so not a small miss there. The earnings did beat, though, the bottom line, 58 cents versus a 56-cent estimate. And kind of in line, they're expecting 2026 earnings 321 to 324. Analysts are at about 322 or 323. So pretty meh report all around from Coca-Cola.
So it was a clean setup that probably going to be struggling. Like it wasn't going to blow it away. Probably it wasn't running up because there was expectations it was going to blow it away. It was running up because money was hiding there. So now you pull back because our expectations were higher for Coke, and Coke's not getting over a high bar. The earnings are the same every quarter.
Yeah.
They're not blowing away. It's like all of a sudden they got 20% revenue growth here. I mean, this is a company that's, steady as she goes. We like the dividend. We like, stability. We like the fact that we know our stock isn't going to fall 20% in a day. That's what Coke is. So a little bit of a higher bar here. So again, we talk about the bar all the time. And, just for those who are joining the show for the first time or haven't listened to the show for that long, the bar is simply, what has the stock done going into the earnings report? Has the stock run up or has the stock sold off? If the stock has run up, the bar is higher. If the stock is sold off, the bar is lower. Coke had a high bar, stock was running up for reasons that were nothing to do with the company's fundamentals. So that's, a high bar for Coke. Going the other way, we have a plethora of stocks with low bars, and many of them reported overnight. Datadog, software name. Stock was $200 2 months ago. It hit $100. I mean, the stock is down basic 105. Stock's down like 50% in 2 months. That's a low bar, folks. So they come out, Brenster give us the earnings for Datadog, DDOG, because these earnings were fine. That's all it needed to be, was fine.
Fine earnings. They reported Q4 earnings 59 cents versus 56 cents. Sales 953 million versus 920 million. Sales figure pretty nice. Guidance wasn't great though. They're looking for Q1 earnings 49 to 51 cents versus a 53-cent estimate. For the 2026, they're expecting earnings 208 to 216 per share. Analysts are all the way up at 204. And one of the things for this high bar, low bar discussion is if the bar is high, you want to blow it out. If the bar is low, you can kind of step over that bar. And so Datadog here, not good guidance at all. And shares this morning trading up a good almost $10. This is your low bar. The guidance didn't even matter.
Didn't even matter.
If
this
bar
stock
mattered.
was up at $200 and it reported this quarter, the stock would be down 20% on it. For real. It would be a completely different response. So what matters the most is not the actual earnings. It's about the expectations. You started this, Joel, with the show talking about expectations, great expectations. Remember that book you read back in English? That's what this market is. Great expectations or not so great expectations. A lot of low bars here out there right now. So some of these companies that are reporting earnings don't even have to have good guidance and they go higher because everybody thinks Datadog is going out of business all of a sudden. Well, they didn't say they're going out of business, so that's good news, and they rally it up. That's where the bar matters the most. So DDOG rallying on what I would say is pretty crappy guidance. Now, does it hold? That's another question because it's up 7% here. I don't think this report is great. It's already starting to leak. I think it's just a relief rally in itself that they didn't really cut guidance significantly.
Dennis takes words right out of my mouth. Don't get Palantired on this one, okay?
Yeah.
Very important to get back to that pre-market high. I'm not even going to mess with the dailies here. Now, I'm just going to tell you, they spiked this thing to 127.69. We're $6 off that. The longer it takes to get back, maybe you can find a daily level in between there. You got to watch out for the get back on this one. So right now, I'm just going to top of yesterday's range is way down at 115.85. Don't know if we'll get that low. I just wanted to mention one thing about Coca-Cola here. And from a small segment we did in the STN room yesterday, Dennis, when's the last time there's been a big sell imbalance on Coca-Cola on the open? There was an extraordinary sell imbalance on the open. And to me, maybe this is just drawing parallels are not there, but someone said, I want out before this earnings report.
Well, that's a good point. You got like 400,000 shares, somebody dumping 400,000 shares on the open yesterday. They're like, I'm just getting the hell out because I don't want to take Coke into this report. I think if you're looking at these staples and they've run so far and you've got more of these things reporting and there will be more of these reporting as well, you've got to think, man, there's some high expectations here for companies that typically don't blow it away. So some of the setup is cleaner to actually be short these names in the report, just as it was a clean setup to be long Datadog. And I know a few people took it long. We talked about it in the STN room last night, took this long into the report because we were saying the bar is so low here, probably doesn't matter what they say. As long as they don't lower guidance significantly, it's probably going higher, and it absolutely did.
Yep.
Continuing with the bar conversation, though, because it's an important one, there was a lot of other stocks with low bars. I mean, Spotify is sitting in the dirt. They're like literally laying on the ground there. That stock was $700 3 months ago. It's $400. So they say anything okay. Anything okay. The stock was likely to go higher. What did they say?
They did say something. Okay, they said sales are going to be sales reported around $5.3 billion. Analysts were around 5.15 billion. So nice beat there. They had some pretty strong user figures, 11% growth year over year. There's over 750 people using Spotify monthly. Premium subscribers up 10%. You want to see that around 300 million. They also gave some guidance that was fine.
That's what you want. It's just fine. When you have a stock goes from $700 to $400 in 3 months, just say anything. Fine is good. Fine is good. And I would say this earnings were good. And the stock's up
They
10%,
were good.
probably warranted to be up 10% because everybody's expectation maybe a little bit too, low for this stock. Again, low bar, high bar absolutely matters.
Oh boy, I'm trying to get this trend line in here. The steep trend line, maybe.
You're redrawing it right now.
The
problem is this stock is still in a bear market.
I don't even know what to tell you on this one. I mean, this is not investment advice. I don't know what the expected move was, but it hit 484.75. 484.75, and you leaked $30 on this one. You know what? I'm gonna take a big old pass on the technicals on this one because
that's fair.
$400 or $500 stock. Yeah, pass on this one.
Can we do another? You want to do another low bar here, Oscar?
Yeah, Oscar in the gutter. Same thing. Stock going into the report, sitting near 52-week lows. Stock was $22, $12, basically been cut in half over the course of the last 3 months. Got great support down here at 12 going into the report, and then it reports.
It reports, and I think the immediate price action is important here because the stock moved kind of sharply lower. The quarter was pretty crappy. They reported a large loss, larger than expected loss, $1.24. Analysts were down at around a loss of 90 cents, so that's a miss. They also missed pretty substantially on the sales. They reported about 2.8 billion in sales. Expectations were up closer to 3.1 billion. But it seems the guidance was really strong. They're looking for 2026 sales around $19 billion. Analysts were all the way around $13 billion. I didn't look into why there was such a discrepancy there from either the company or the analysts, but I think that move lower, maybe an algo reacting to the crappy quarter and then getting a rebound here as people are like, okay, this guidance is really interesting. What's going on here with Oscar?
Let's go with whole numbers here. It looks like 12 was holding in the regular session. That got beat. 11 held. And now you got a little pop over 14 here. You poked your head over 14. So a couple highs in this area. I think if you want Oscar to have one heck of a day, I think initially you need to build a 14 bid. But man, look at the bad days it had here in a row. 1, 2, 3, 4, 5. I mean, how many people are saying, get me to 14 or get me to 15? A lot of overhead supply here in Oscar.
CRDO is an interesting one. And because the bar was super low 3 days ago, but then it ran up 25% ahead of the report. So you could say, well, the bar is kind of higher here now. I'd say it was a tough one to call. But overall, the stock hit $213 in December. It's $123. If you just kind of take it in, context here, even though the stock ran up 20%, ahead of the report, which we often talk about stocks running up ahead of reports as being, a very viable strategy and a good one. This, still probably had a pretty low bar. Brentster, how did they do?
Yeah, and I just want to say, I'm pretty sure we did. I'm just looking right now. We were not expecting Credo. This was a piece of guidance. This wasn't an earnings report. This wasn't a pre-announcement. It seems like they're guiding here. So they reported Q3 sales in the range of 404 to 408. That was raised pretty substantially, about $50 or $60 million. They had previously guided around 335 million to 345 million. The one thing that I did want to say on this one is with guidance, usually companies will give a little indication why they're giving this guidance. Is it because something went really well and they weren't expecting it? Or is it because something went really poorly and they weren't expecting it? Credo did not give any indication like that. It was just kind of the numbers. So, just take that for what you will, I guess.
Joel, technicals on this one.
I just looking to see this thing went to 155. 155.
Yep. That was after hours high last night.
We've leaked significantly.
Yeah. To
You
me,
can
I put the question marks. It's all about this 140. You're trading 140 here. You're up $17. You hold 140, take a poke at the 144.07 high from January. But once again, this kind of move, develop more overhead supply for buyers above 140. Holds 140. I think you're good to go. Below 140, I don't know where you're going. The top of yesterday's range is $25 lower.
I just think we're in this market where there is still the mentality of sell the rip a little bit. Like it's not gone away, even though we've had a great couple of days and the market's continued higher. On these tech names, we are still seeing some sell the rip mentality here, and it's an issue. It's an issue. So let's see what happens. I do think if you're trading all your Palantirs and your Oklos and your nuclear names and all your nosebleed, like names that don't even have revenue, some of these stocks, you got to keep an eye on crypto. I'm just going back to it. I think as long as Bitcoin remains weak, it's going to be hard for these names to sustain rallies. Now, if Bitcoin and crypto can come back, and you know what? I still own crypto in my long-term account. I think it eventually does come back. That'll be the tell, like green light, go. Let's start buying some of these beaten up names. But I mean, we've had the Dow at all-time highs. Palantir had a nice day yesterday. It's up a little bit here this morning, but let's give it context. A month ago, it's $190. It's 144. I mean, the stock, which is the retail darling, Breadster, we've argued this. Palantir is the social media darling of darlings. Like if you ranked them all and you just
Tesla.
came in and you ranked all your social media stocks, Tesla's up there for sure, Joel. Like
Top
near
3.
the high.
Yeah.
I almost think Palantir might be ahead of Tesla.
I think so.
On this social media darling scale. So those are the stocks that have been hit the hardest, the social media darling stocks, the stocks that have just been relentlessly bought, for 3 years, no matter what, just keeps going higher, and your head scratching as it goes, 100 times sales, and we've never seen valuations like this before. Those are the stocks that have been hit the hardest. So when the social media stocks start to turn, I think is going to be linked when crypto starts to turn. So I'm going to keep that linkage there and keep watching Bitcoin and crypto as leading indicators for this whole cohort of stocks.
I think Joel got the other one here, Robinhood. I think like your Palantir, your SoFi, your Tesla, Robinhood, Chat. What other ones here you think?
Yeah, I would put Robinhood right up there in the top 5 as well.
Yeah.
So if we're trying to create the top 5 list of most social media darling stocks, I think there's no doubt Tesla, Palantir, and Robinhood all fit that bill. The other ones that are up there, there's a whole bunch of nuclear names you could put in there. There's a whole pile of names you can put in there. But, Iron, Nebius, all those are loved as well. But none stand out quite as much. Keep giving us names because this is like lists. Like one thing about trading,
we build lists.
We build lists. ASTS Rocket Labs, 2 great social media darlings. I mean, this is, how you make money in the markets. It's understanding relationships. It's understanding because this is going higher, this is likely to move higher too. And you have fundamental traders, you have technical traders, you have other traders that are doing trades for totally different reasons. And maybe they get caught off guard by the relationships. I will tell you, I make money not because I'm a good technician, not because I'm a good fundamentalist. It's that I'm good with relationships. That's why I make money consistently every month.
Wow, I did not realize this. But Hood, from that all-time low of $6.81 when it got downgraded by Goldman Sachs, Citigroup, Morgan Stanley, Bank of America, Merrill Lynch, E.F. Hutton, up to its all-time high at 153.86. Baby, you 50% retracement at $80. Are you kidding me? That thing gave half of it back. Actually went to 71.87. So for all you Hood bulls out there, man, you start to form a base, and I'm not just talking about dailies, maybe weeklies or monthlies here, holding $80. Man, oh man, it could be a bottom after a move like that. But I just 50% retracement of that entire move. So whoa, that's a big move.
It's a crazy move for Robinhood. Like, this is significant. I mean, just stop and talk the stock for a few minutes here. Mish is going to be coming on shortly. But $153 down to $71. The stock fell more than 50%. This is the darling of the darlings. Like, I mean, again, when we're making these lists, we're up Palantir, Tesla. You may put Robinhood right at the top. Some people probably put Robinhood right at the top of this list. I mean, it encompasses everything. It trades off crypto, directly off crypto, because obviously the crypto business, with a lot of traders trading crypto on the Robinhood platform. The whole social media darling trade is like we trade for free. We like to come in here on our Robinhood platform and trade here. It just encompasses everything about the retail trade, the social media darling trade. So it's maybe number one. Question is, it's been sold off significantly. I think this is one of the best run companies. I know some people don't like Vlad. I think this is one of the best run companies out there. Like, he's done so many things so well, cutting edge, to obviously, getting, now into the predictions markets, crypto. They're all over everything. They invented basically free trading. They were the first ones to come out and say, hey, look, we take payments from Citadel and everywhere else here. We can actually make trading free. We know trading isn't free. I've just had this discussion before. It shows up, in execution, but at the same time, people don't like saying direct commissions. So they don't mind paying spreads because they don't like paying commissions. So Citadel's not
actually commission-free trading started in 1998 at oldie discount when if you had an account over $100,000, and those guys,
there you go. Okay,
all had Bloombergs, and they picked you off right and left. So especially when Dan Dorfman would come on with the Dorfman segment, he makes Kramer look like a choir boy. That's all I have to say. I bet
there's a blast from the past.
Yeah, we have a special guest in the background here, and that's Mish Schneider, and we wanna bring her on. So Mish, if you could give us a thumbs up, we are ready to go. She looks like she's getting ready to go. She is ready to go. We're gonna do it. I want to do a little something special for Mish here. She's working real hard on a new project. So let's bring in the chief market strategist from MarketGauge. Schneider, chief market strategist at MarketGauge, joining us here on pre-market prep. Mish, I know it's super early out there, but you look like you've been up for hours doing stuff. Thanks for joining us this morning.
Thank you. And I have been up for hours because I have a 12-week-old puppy.
Oh, the old puppy. Okay, before we get into our regular programming here, Mish has been working on a really, really great project, and I've been helping her out with it. And you all know about the Modern Family, right? And the Modern Family is to educate people about the markets. Not everyone listens to pre-market prep, and not everyone, we're looking at younger people or people that don't know about the market. So she's been doing some stuff here with the Modern Family, and I've been helping her out. And what better member of the Modern Family to start out with than Granny Retail? So folks, please give your feedback to Mish on this. You can email her or on Twitter, but she's working real hard on this project. I'm trying to help her out.
Oh, we got it muted.
Oh, hold on. Take two.
We're putting this on Joel. Whenever something goes wrong, we always blame Joel. Even if it's not Joel's fault, we always blame Joel because he's thick-skinned and he can.
All right, go with the question. I got to find it again.
I got to find another one here. Okay, we're gonna come, and the anticipation was killing me there. So you better get it, Joel. I want to talk to this overall market here. We've been having a long discussion on the tale of two markets, where it's been value versus growth, and value has been winning here for the better part of 3 months. I argued yesterday and the day before that value has maybe come a little bit too far, that maybe we've just overshot, where software names, you've got coming down from PEs of like 40, IGVs come down to I think 22 times forward earnings. And maybe AI is going to displace all software, maybe it's going to go away. But then you have the opposite, where Cokes, Pepsi's, Walmart's trading 43 times forward earnings here now. I mean, Walmart is trading twice the multiple of some of these software names here now. I want to ask you, just in context, obviously the value trade has been underperforming for a decade. So maybe it was its time. Does this party continue, or have we gone too far too fast? Talking like value.
Well, I think that we have to look at why value all of a sudden started to catch up. And of course, we know, Dennis, that ratio is when they get too far stretched, like the one you just mentioned, for decades versus growth, tend to unravel, and there's a little bit of that. But I think a lot of it has to do with anticipation, number one, that the administration policies of bringing goods back to the U.S. and having the U.S. industrial whole manufacturing sector start to grow was based on optimism that all of this would work. And I think part of it is also the fact that people are anticipating lower interest rates are coming. We just don't know to what degree. And so if you look at it just from the pure, like, yay, rah, 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 you know, everything's great and this is all working, then it could be very sustainable. But we also know that that could unravel for so many different reasons, which of course is why we're seeing gold back in the picture and the dollar and back to the dollar debasement trade. And now long bonds, I definitely want to talk about that, starting to perk up a little bit. So really it's a matter of, can these policies, we still don't know about the Supreme Court and tariffs, can all the policies that the Trump administration and Bissett have put forth to really basically bring everything back to the U.S., make us stronger, make us less dependent on imports, and export more last. And as soon as we start to see any lack of confidence there, then I think we will not only just unravel in terms of the value growth, but it could be just a great unraveling, which is why you're seeing some people, particularly big institutional investors, talking about some major sell-off that's coming, just hasn't happened yet. But with that said, Dennis, it's hard to predict that right now when you have the Russell 2000 looking at all-time highs, regional banks on, you know, doing not necessarily all-time highs, but doing a lot better, transportation on new all-time highs. So we need evidence. We don't have it. But, you know, we traders, we're always looking for the shoe to drop.
Oh, well, it's in our blood. I mean, it's because we like trading crazy volatile markets here. So
Exactly.
We're always looking for the next risk factor because traders think risk first and then return. Joel, I think, is ready to show. Are you ready, Joel?
I thought I
He's ready.
was. Yes, I am. Take two. Hey, Granny, thanks for joining me today. Why did you pick the retail sector to represent?
Joel, I didn't pick retail. Retail picked me. I love to shop. Upscale, fire sale, Granny is retail.
What you should really know about me is that I am the most important sector of the economy.
I bet you are quite the shopper there, Granny. Let's break down your XRT ETF. What are the top components?
In my ETF, by the way, did you watch Crypto Bro explain what an ETF is? Anyway, I got 75 companies in my basket. 76% of them are consumer cyclical stores, the kind of places that folks shop, eat, sleep, or fix their cars.
Are there any non-retail components in your ETF?
A smidge healthcare, communication services, and technology, mainly because I go to drugstores all the time and I like buying electronics.
Electronics? I'd certainly be interested to hear what kind of electronics you'd like to buy. Are there all U.S. companies in your ETF?
USA! USA! USA!
I noticed a couple big box retailers in the XRT. Walmart and Target. Certainly similar to their stores, but what's the reason for the divergence in their stock price?
Think about it, Joel. People can't live without groceries and toilet paper, so Walmart makes sense. But Target? I think I can live without those cute throw pillows.
You may be able to live without those cute throw pillows, but I can't. A lot of sectors are seasonal in their earnings. Some seasons better than others. Are the earnings seasonal in the XRT retail ETF?
We've got better seasons than others. Back to school, Black Friday, and Mother's Day. Now, don't you forget to buy for your mom this year.
Oh, I'll do what I can to help out the retail sector. My wife will too. Well, Granny, thanks for joining me today to talk about your ETF, XRT, representing the retail sector.
Wow, that's awesome. That is awesome. It's so educational, though. Like, I mean, breaking it down like this. Great job, man. Joel, great job on the interview, too.
Right. I was going to say, let's start with the fact that Joel has become my BFF, right? So he has, he called me and asked if he could interview the characters. And then we decided that Granny, and of course, Joel's the one who has talked about Granny Retail as the indicator for the economy. And certainly we learned a little bit about why. So this was all Joel. I also have to, of course, thank my team, James Mulligan and Charles Freebear, who put it together. And of course, I did the writing with Joel, did all the questions. So essentially, just to step back, besides thank you. And by the way, I saw the comments coming in and they were great. So that made me very, very happy. What we're really trying to do is exactly what Joel really wanted to point out to you. And that is financial literacy done in a way that's never been done before. These characters are not AI generated in that I created them. You guys know 10 years ago, we've been talking about Grandpa Russell and Granny Retail, Sister Semis, and so on. Yeah. But AI has been the reason why we can do this type of animation. And so we're growing with this. We have lots of different videos now where the sectors explain who they are, what they do, or the reaction to conditions. We're also doing straight on, like Granny mentions, Crypto Bro talks about what is an ETF. And we're trying to develop this whole curriculum. It's what everybody is talking about, especially with the Trump accounts and the money's going to kids now. And so we're very excited because I don't think there's anything like this that exists in this way. And we're hoping you guys can help us make it grow. And it doesn't cost anything for you to subscribe to the Economic Modern Family YouTube channel, give it a like, share it, and spread the word.
Awesome. How many other characters do you got working on? Like, how many other ones are there?
Well, we have Crypto Bros, I just mentioned, Grandpa Russell, obviously Granny. And then besides that, we have Big Brother Biotechnology, Transportation, Sister Semiconductors, Regional Banks. And Regional Banks comes with Neobanco, who is our cat. It's Regional Bank's cat, Reggie's cat, but he really represents the digital banking sector, which of course we know is growing. And now with the Clarity Act, it's very timely.
If you want to give Mish any comments, you can send her an email, mish@marketgauge.com. And Brent, could you post that and also the Modern Economic YouTube channel? But let's get right to it, Granny. Let's look at the XRT. This chart looks perfect except for the triple top up here. Tell us about what's going on under the hood.
Well, and it's really great, Joel, that you chose Granny, because when I say that the consumer, when she says, I should say, that the consumer is the most important sector of the economy, it is, right? If people stop shopping, and I know that, Dennis, you mentioned before I came on the show about consumer staples, all of a sudden have gotten a big bid. Who would ever expect that? But then again, why wouldn't we expect that? The question about Costco versus TJ Maxx is very relevant. People are buying what they need. And so what we need to really see this market sustain, and we've seen this in every single downturn, is that the first sector to sputter is the retail sector, excuse me. And we have consumer retail sales coming out, I think, this week as well. And so we'll see. But if the consumer is not buying it, then I don't care what's going on in the rest of the market. If you're always going to have things that are doing better, but it's going to show here at the retail sector first. XRT could be those triple tops if we can't take that out. And let's not forget, in 2021 is when XRT made its high, when we were all sitting home buying stuff with stimulus money. So those days are not here right now. May come back, but right now, no. I mean, there's been talk about stimulus money coming in as we get closer to midterm. So the other thing I want to say about this is that why would Granny sputter? It would be obviously because of the cost of things, wages being flat, obviously the labor market now a new concern. We're already seeing the stress in the real estate market. But this brings me, of course, to hard assets. And I'm finding my personal portfolio getting deeper into hard assets and less into equities. So we have to watch oil, obviously gold and silver. But now the grains are picking up. Soybeans are starting to look interesting. If these costs, especially oil and food, get passed on to the consumer, puts even further stress that what they've already felt. They have not really felt inflation coming down as much as what the numbers suggest. And this, of course, would be another real concern.
Mish, when you're going into hard assets, like, I mean, you're not going out buying corn futures, are you here? Like, where is your go-to ETF or go-to investment vehicle if you want to just be invested in more hard assets like you're talking about?
Well, I am actually in soybeans, the ETF, believe it or not, SOYB. And I bought, I bought them at 22, 24. And I took a little bit off when it got over 23 because, we're traders, locked in some, about a third. But I'm holding the rest with a no-loss stop. And I think looking at the soybeans right now, if you want to actually equate it to the futures, if the beans get through in the March contract 1120, I see a lot of blue skies there. But again, implication, of course, some of this is on the story of President Trump and President Xi talking about China buying more of our soybeans. But, and supposedly crop conditions were unbelievable. That USDA report that came out seemed to be the low in a lot of these ags. And if you don't want to place specifically soybeans or corn or wheat, you could look at DBA. And DBA also, let's put up the DBA chart. That also looks like it's, you can see on the daily, it's been down a lot, but it's pushing against that resistance at 26. And I think if we can get a good move over 26, there's a rally. Am I going to go to new all-time highs? I'm not going to make that prediction, but I'm going to say that compared to the rest of the market, this has been so undervalued. So go back to the ratio on food versus gold. Oil versus gold would be the other one I'm buying. So I'm long crude oil. I was long natural gas. I got out. I'm looking to buy it back. I still think it's way too cheap. And of course, I got back. I shouldn't say I got back. We held on to some silver. I added to silver last week, and now that's back over 80. So that's what I talk about when I talk about hard assets mainly.
What about rates? What about rates in factoring in this entire road? I mean, we swept it under the table. Like, we're not even talking about it anymore. Talk about the expectations for Fed, and more importantly, how the rates affect the rotation in the markets.
Exactly. Well, there's a couple of stories that are out right now. Obviously, China talking about not buying U.S. treasuries. Other countries now having the same conversation, what does that mean? That means that we in the United States have to buy back our own bonds. Okay, that's very inflationary. Just ask Peter Schiff. I mean, he's still the biggest gold bull I've ever seen. Yeah. But secondly, let's talk about the fact that what is Trump saying? He wants lower interest rates. He thinks that he can get this economy to grow by 15%, and he thinks it's with lower interest rates. Rates back down to 1%. Can that happen? Yeah, but there's going to be a lot of collateral damage. And what the biggest collateral damage will be, of course, will be inflation. Commodities love lower interest rates. So now if we take that and look at the long bonds, which is what I'm looking at, because we know that we saw a big squeeze between the 2 and the 10 years, which is also not sustainable. Those long bonds, they've been in a downtrend since 2022 when the Fed started doing that fast acceleration of interest rate rises. And now it's been bottoming out throughout 25 and now into 26. And I like to look at a monthly chart. We get a monthly close over 90. I think between 86 and 90 is a little bit noise. But if we get a close over 90 on a monthly basis and hold there, I think that means the trend has reversed. And what is the reasons why? Does that now become a safety play? Is it because there's risks of a recession people are starting to talk about with the labor market? Whatever the reason, it doesn't matter. I would follow the chart, and I would say I would put a lot of money more back into bonds for the first time in 4 years.
Mish or Granny or whatever.
You call me anything.
I had a little piece of paper on my desk, and I was using it. It was something that you said about labor and unemployment. And you talked about the different types, structural versus cyclical, right? And the different types. And you were talking about the whole AI. So where are we going? Where are we going with the AI? Is this just going to white collar jobs, blue collar jobs? I mean, are you going to have robots picking up your trash? I mean, where are we going with this? What are the long and short-term effects of AI on really the most important thing? If people don't have jobs, they're not given, they're not like Granny. Well, Granny probably retired getting a ton of Social Security. But talk to us. Talk about the unemployment picture.
Well, I think it's in terms of AI and employment, it's a half full and a half empty glass, right? So let's start with the half empty glass. Exactly what you say. That puts millions of people out of work. I went to Bank of America the other day and I met with their Merrill representative because I just kind of wanted to get an idea of their CD rates, et cetera. And she basically said, oh, soon you're going to come into the bank and there'll be one person here. Everything else will be done through AI. So I think everybody in every field is anticipating that their job is going to be gone. However, the ideal situation is that AI makes everything so efficient that people will be able to make money through the use of AI. I mean, we're a great example. Free Bear, who works with us, lost his job in the movie industry because of AI, because he did all the back post-production stuff, which is done now with AI. Yet he gained a job by coming in and saying, let's do AI generation of your economic minor family. So people will have to reinvent themselves. There may be a good way to learn about investing, which is why we think our course is so important now through our cartoons. And people also may be getting some kind of a universal income, because if producers are so efficient with AI and costs can come down as a result, again, this is utopia, then why not give people money to stay home and then they don't have to worry about feeding themselves? So that's the thing. And of course, we always know when you're looking at the worst case and the best case, it's going to be somewhere in the middle.
Mish Schneider, Chief Market Strategist and MarketGauge, creator of the Modern Economic Family. Please give her a follow on Twitter. Please check out the Modern Economic Family YouTube, because they're funny. They're hilarious. I mean, you guys are going to get a kick out of this. So
that's
Mish,
great. That was great.
Thanks again for just being a fantastic contributor, not only to Pre-Market Prep, but to our audience and the investing public. Thanks, Mish.
Oh, thank you, guys. I so appreciate your support. Have a wonderful day.
Thanks, Mish.
We're jumping right into rating. The ratings, folks, brought to you by our sponsor, The Fly, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new The Fly Pro platform with AI-powered company analysis and unique KPI charts for deeper insights. There is a QR code in the bottom right of the screen right now. You can scan that to get over to thefly.com. We're going to serve up the first one here, and we'll take a look inside of the Fly's platform to get a little bit of color from the note. Our first one for the day, we're going to go Under Armour, ticker UA, or maybe you like the UAA, downgraded to sell over at Citigroup.
I mean, this is a completely contrarian call because the stock has been running and running. We know there's been a Fairfax Financial big Canadian company has been scooping this stock up for months here now. And the stock has been right because it's been moving higher, but now you get a contrarian rating coming in. Why, Brentster? Do you have any color?
Actually, yes, do have some color. Thank you to The Fly. Citi says the company's turnaround in North America is facing, quote, several pressures this year. Company faces a higher competitive landscape and its direct-to-consumer traffic is, quote, weak. Citi believes the company needs to invest more in marketing and is also cautious on Under Armour's business in Europe, the Middle East, and Africa.
Wow, lots to think about here. Again, the stock has just been running relentlessly here over the course of the last, month. You call it, lower PE stuff. I mean, you just call it, just move out of tech. Like that's what it's been moving into real companies. The stock has started the year 2026 at $5. It's $8, up 60%. So maybe it's a contrarian call here because the stock's been moving up. I mean, long-term UAA has been a terrible investment. But lately, the stock has been moving, and Fairfax keeps scooping it up. I would not be surprised if we dip substantially that Fairfax comes in and buys more, because they've been buying this. I don't know how many times when we look at the filings there, Brentster, but I just see it seems like once a week, Fairfax comes in and buys a chunk. They'll probably be looking to buy the dip too. So I'm going to say I probably am more inclined to buy the dip on this than, following them and selling the stock at this point in time.
Well, I hope no one from Citigroup is listening, because I give this rating an F-.
Oh, talk to me. Why?
That's brutal, Joel.
Why so much hate?
Oh, I mean, you're telling me now? You're telling me now that this is a downgrade to a sell?
Well, they've been neutral for a while, so you got to give them a little bit of credit here. So they've been neutral, but I mean, it's rallied up pretty substantially. I don't know when they went neutral. I don't know if they went buy to neutral. Like, I mean, the stock was what, $45 8 years ago? It's been a terrible investment long term.
I don't even know why anyone's covering it. But anyways, that's my rating. I'm with Dennis on this one. If anything, maybe shorts, want to try and buy the dip here.
Short, I'd be
Fairfax is in
covering
it.
the dip.
And Mohammed Al-Arian has a position in it too. So
does he?
Yeah, he does. I keep mentioning it. It's not huge. So, I just met he was buying. I bet you if you go back and look on the fly, it was right in here. He was buying it here. Mohammed. Yep. Al-Arian.
Really?
So, yep.
I'm a huge Mohammed Al-Arian fan. We interviewed him once or twice on PreMarket.
Yeah.
Prep. We've got him before. So
I've tried. You know what? I'll get Zoe.
Go try again because I'm a huge fan. Tell him, one of the hosts is a huge fan of yours. He actually, even when he's got his own podcast going, he'll shut his own podcast down just to listen to what you have to say. That's how much he likes you. I love Mohammed. I love Mohammed Al-Arian. So go get him, Joel. Go get him.
Joel, Shubs was buddies with Mohammed.
Exactly.
Not how we were getting him.
There you go.
Call Shubs.
Yeah. We got
Call
to
Shubs
get
to help
on.
us out here.
Where's Shubs?
Shubs will get him for us.
Yeah. Okay. All right. That's a lot on Under Armour rating, but that's what we do here.
Next one. Two more quick. Okay, next one was Unity Software upgraded to outperform by Oppenheimer.
So give us some color here if you have it, Brentster, but I'll just
give
you, this is obviously ground zero for, AI destroying all these software companies. This is software right in the name. They obviously make software that runs gaming. Michael Packer's been a big fan of the company here. He thinks it's way overdone. And it is a buy. He was on our show last week talking about Unity. Stock went from $40 to $22 in a heartbeat, like literally 5 days. That is crazy move. It's bouncing back. We're having, cooler heads prevail. It's bounced back a little bit, continues to go higher. The biggest problem here is overhead supply, Joel. You talk about it all the time.
Yeah.
Supply everywhere on this puppy.
I like this is an A+. I like this. He's trying to buy the dip.
Sticking the neck out, right?
Yeah, sticking the neck out.
Buying the dip.
Yeah, buying the dip. I don't want to get carried away with the software comment. You know what? Let me think about how I'm going to say it, because the way you guys take notes and stuff on this show, I know it will come back to haunt me. So maybe I'll give my overall software comment tomorrow. But anyways, what's the other rating we want to
dealer's choice here? You guys decide. We have a Take-Two upgrade to strong buy at Raymond James. Also, we have Shopify upgrades at a couple firms. MoffettNathanson, one that we heard last night, and then I think this morning coming through from a firm called ATB Capital. I don't personally know ATB Capital, but you guys pick Take-Two or Shop. What do you want to take a look at?
Do Shop. And again, same story. Software coming for software. I mean, Shopify just continuously usually blows the numbers away. And I talked about this yesterday on Stock Trader Network, saying I think this is one that I actually might intentionally take into the report. I rarely do that. I rarely buy the stock at 4 o'clock to take it into the report. But if the stock can stay down, if it runs like $10 or $20 ahead of the report, then all bets are off. Does it report tomorrow morning or tomorrow night? I think it's tomorrow morning, is it not?
Good question.
Brent's just going to go look at the time for Shopify. But I think the bar is really low here in Shopify, and the bar is low because it went from 160 down to 110, selling off all software. But I mean, Shopify is a company that usually blows the numbers away, and the bar is really low. This sets up to be like a data dog, where if they say anything okay, I think you'll get a relief rally here. Now, it is up 5 points. We did make some money because we bought this last night. I flipped it into the upgrade here this morning, looking hopefully to get back in here maybe tonight ahead of the report.
Yes, I believe Shop is tomorrow. I mean, I'll give this an A++. I mean, buying the dip here. I mean, I don't mind it. 180 to 110. You got a nice little bottom in here. Of course, anything can happen. The short term, not too far off that pre-market high, but pick your poison between 120 and 130 here, because there's absolutely nothing there.
Yeah, so shop is definitely tomorrow. We don't have confirmation. I believe it's tomorrow morning. So
It's tomorrow morning.
We'll see.
It's tomorrow
It
morning.
is tomorrow morning.
Yes.
Confirmed.
Yes.
Thank you.
Yep.
So
no problem.
I may be buying the close on this one, and then I may take some of it even through the report. We will see.
Low bar. All right. Well, it's come up a
Talk about
little
a low
bit.
bar.
But anyways, we're gonna wrap it up for today. Just for you guys, like people that like to trade a little bit differently, a little bit more intraday. Trader Pratt is going to be on the Stock Trader Network at 1 p.m. today. He scours the prediction markets. He does a lot of fun stuff and does a lot of nice setups. Also, if you're not familiar with our new programming, Money Mitch is working night. He's working the night shift. He is on Sunday through Thursday from 7:30 to 8:30, going over swing trade setups, both long and short. We got a lot of other programming going on there. Not quite 9 to 5 yet, but we're working towards it. So thanks to everyone in the chat. Thanks for the kind comments on Mish, and we'll be back with you tomorrow morning.